love this graphic because it's not perfect. Some people would look at this and say, oh, you got a perfect font type. Others is calligraphy or a little twist on it, right? A certain color, right? So I love the first portion of this. It says determining your trading style is a critical step in becoming a successful trader. Everybody carries their own style, all right? So there are many trading styles. We're going to be focusing on some of the 4 major ones, okay? So most styles fall into 4 major categories. One, they're going to have some type of an intraday. Maybe you've heard that term before. It's also known as some day traders. That could be 1 day, it could be 2 days, but that's sort of the term, okay? There's one that's sort of a shorter type of trading style. You may hear the word, it's a swing trade. That swing trade could be a couple of days to a couple of weeks. We're going to go into greater details with that. Another one is known as an intermediate type of trading style, and this is a trend following or a trend system. Last but not least here, you may hear there's a longer time frame, and therefore it's known as a position. You may build a position around that. We're going to go into the details of all 4 of these. High level view, you can read the slides as we go through it, okay? So a couple things that you want to learn about in determining your trading style is you may want to consider the following, okay? Time. How much time can you devote to trading? Okay, maybe it's only 5 minutes a day. Maybe it's 2 hours a day, okay? Another one is what time of day. Maybe you can trade in the morning or maybe in the evening or maybe on a lunch break or maybe you can't do any of it, okay? What time of day can you trade and or can you do your analysis, okay? You got to have some sort of a routine associated with this. If it takes a few minutes in the morning or in the evening, be able to stay on top of things, okay? The other one would be your account size. Okay, we're going to have anywhere between, hey, may have $500 to trade to someone who may have millions of dollars to trade. And you may break that down into different parts. Okay, you may also have some things relating to your own investing objectives. Things that consideration around those objectives are, am I more in this for income, okay, on a week-to-week basis, okay? Or am I more interested in growth of my portfolio, okay, or long-term, okay? The other part in your trading style you're going to consider is your risk tolerance, okay? We talked a little bit about managing risk on the last section. So some people have a really low tolerance. Others will have a really high tolerance. It's individual based, okay? So let's talk about some of those things with each style. We're going to go through this fairly quickly. You can go back and watch these slides if you'd like. But let's talk about those different trading styles. So intraday, okay, first and foremost, time frame. These are known, you're usually going to trade on tick values, a number of trades that are done to minute charts. So normally a tick chart, a 5 or 15 or a 60-minute time frame. Those will be the types of charts you'll be looking at. The characteristics behind this is trades will be opened and closed during the trading session. Okay, usually just one day. Okay, we usually have very tight stops and we have many high trade frequencies. Okay, so very often and frequently. Okay. The positive around this is set for more active traders. We'll have several opportunities throughout the day, and we're not going to carry any overnight risk that we talked about that you can have with gap risk and so forth. And we don't have to carry as much maintenance requirement for that. Okay, the challenges behind this is it requires strong technical skills, and I would put very strong technical skills. The shorter the time frame, the stronger your technical skills need to be. They need to be very honed in. You also need to be patient to wait for a good setup, not to overtrade. It is definitely more challenging due to the faster pace and the time frame that we're looking for. Okay, Let's take a look at the next style, the shorter time frame. These are typically going to be from a couple of hours to a couple of days. So these one, the time frames we look at on the charts would be a 60-minute, a 240-minute, or daily. And again, you can make some combinations between there as well, but we're mostly focusing on those, okay, high level. The characteristics behind this one is it's a style of trading that attempts to capture gains with very specific targets. We're going to be shooting for something, I think like a gun, or have a target practice. We typically will have a little bigger stop than our last one, which means we'll acquire minimum size stops with slightly larger account size. So the other one may be, hey, I only have $500 to 2,000 or 3,000. Swing traders or the shorter time traders may have, a couple of thousand to maybe 10 to 20,000. Okay, they're still considered an active trader. Okay, positives: you'll have multiple setup opportunities. You don't have to jump on them right away. You can usually have some time to find and analyze a trade. Take a few extra minutes to do that. It also is going to take shorter trading time involved. Okay, you sort of set it up, you know what you want, you're in, you're out, you're done. Okay, you set those things up. The challenges is it will tie up your capital. So this could, for futures, going to carry some overnight positions, a strong technical analysis skills, and then weekend and news gaps risk possibility. It does require patience to wait for a setup. All right, let's jump to the next section, which will be our intermediate. Okay, intermediate types of style of trading is going to be days to weeks on your charts. So usually we'll look at a daily and monthly charts when you're looking at that. The characteristics behind this is a style of trading that attempts to capture gains riding mature trends, not something early on, but riding mature trends. We'll typically have larger size stops with potentially larger account sizes. We give it some more room to breathe, the way we like to look at it. Okay. Positives behind this is it's an excellent style for busy lifestyle traders. There'll be plenty of setup opportunities for bounces, breakouts, setups with technical analysis based off of patterns. It does give you more time to be patient and to find and analyze a trade. Little trading time is involved because you're just doing it and then you're moving on. Okay. The challenges, again, it ties up your capital. It still requires some strong technical analysis. There is obviously some gap risk possibilities that can take place for overnight. It does require patience, though, to wait for a setup and then be willing, and this is the part here, holding positions through minor corrections. Okay, not just jumping out when you see a one down day or a candle or something like that. You give it some time on those. All right, let's take a look at your longer time frame or position type trading. These ones are typically going to be looking from a week to monthly charts. Again, you'll look at daily, monthly, you may look at even quarterly and yearly charts to determine this. This style of trading attempts to capture gains riding, again, still mature trends, larger size stops with larger account sizes. But this one, the difference is it's got very low trade frequency. You may only have a few positions that you do and you hold them for long periods of time. The positive behind this is it's an excellent style for time restraint traders. Selective of setup opportunities, but you do have plenty of time to be patient to find and analyze a trade. And again, very little trading time involved. Actually clicking and setting these up doesn't take much time. You just do a little bit, you're going to be doing more research. And because of that, it's going to take up, again, tie up larger amounts of capital. You don't need to be perfect in your technical analysis, so you need some technical analysis. You also will maybe consider doing some fundamental analysis in your skills. Again, you'll have to understand there is some gap risk possibility. It does require patience, so if you're not a very patient person, this is going to really bring the worst out of you sometimes. All right, so you need to wait for a setup, and again, be willing to hold positions during minor corrections. All right. All right, development of a solid routine is critical to enhancing success. So the things that you want to have a basic routine, okay? You want to have something you consistently can do over and over and over again, not just sort of sporadic, okay? Sort of like a checklist when you're, an airplane pilot goes through certain protocols. These will be some things you want to think about. You also want to have a decent workplace, okay? Organize that workplace for whether it's in your home or in your place of business, or you're going to treat it like a business. Have it organized so it's not all over the place. Okay, emotionally prepared. Okay, if you don't want to trade if you're emotionally compromised, meaning like maybe you got up late. Maybe you had a fight with a friend or a spouse, or you recently had an accident, or maybe there's some, you're not feeling well health-wise. These can all affect you in your ability to think straight and will get you emotionally charged in your trading. It can cause some problems with that. Okay, so you want to create sort of a standard operating procedures. So sort of before you start trading, maybe while you're trading, during the opportunity, and after your trading session. So if you're doing this during the day, you're already prepared, you know what you're looking for. Hey, at certain times I'm going to go take a break. I'm going to get something to eat for lunch, and then be ready for your session, and what to do when you wrap up, or you just shut the computer and go into bed, right? Or you're going to wrap up, know what you're going to be needing to do. Okay. The last thing that can and that helps you with success is influences. So these outside influences can affect you. So you don't want to let anybody influence you or your trades. If you have a plan, okay, which we'll be continue focusing on, these are going to help you. Now these influences then allow you to make adjustments down the road. So for you don't want to be pulled in all these different directions, okay? If you have a plan, follow your plan until you need to change it according to those things. Now, a couple of things that can affect your trading routine, okay, is nutrition. Okay, high level here, you got to eat something before you trade. Okay, don't let get you emotionally charged again. So make sure you're ready to go nutrition-wise. Okay, you may want to exercise before. This is going to help really promote focus and discipline. Need some stretching. If you're leaning over the computer all day, you're going to maybe have some stress in your shoulders or way you're sitting. Get in a comfortable position so you're ready to go. Okay. Another thing to think about is having some meditation or visualization. Having to see it in your mind beforehand. This is what I'm projecting out to the world. Okay. Visualize it. Okay, if there's a pattern or a certain setup you're looking for, this is what I'm seeing. This is where I want to go. Not only create it, we want to create it in our mind first, then that we're looking for that to express itself physically out there for us. Okay, if it takes time to get you focused. All right, you also want to think about making sure your platform, you feel comfortable with your platform, whatever you're trading from. And then make sure you have check your account balance. Make sure you have enough money and you know what you're doing with that. Make sure nothing is out of whack. You also want to make sure your computer is in good hands. It's not having buggy problems, up to speed. Have enough RAM or in there. What do you do if you have making sure you have a good internet and good power check if something happens. Maybe you got a backup battery, or maybe you're on a laptop, or you got a full-size computer and you get sort of a battery backup if something goes down for some odd reason. Okay. Other things to consider would be looking at the news and fundamental check. So checking on maybe economic news for the day, the stories, what's going on there. Okay. You also want to think about sort of your basic technical analysis procedure. Okay. You may have a market bias. You want to develop that. You want to know what the trends are. You'll want to know what support and resistance areas are. What's the overall market condition? Get good at developing a posture. Okay. You'll also want to know, specific plans or rules that you have in front of you. Maybe you need to have it written down when you begin. Have it next to you. Have a notebook for it. Okay. And then last, what happens in an emergency? Maybe it's a loss of the internet. Maybe it's computer problems that happens. What happens if your phone goes down? Do you have a phone by you? Do you have the emergency numbers of your broker in your phone? What happens if your power goes out? This is why I mentioned earlier about it's really important to have those stops, because if you put your orders in, even though your computer may go down, a lot of these are going to be directed through your broker right into their system, and that if you lose power, they still have it managing for you. Okay, so you want to check in with that. All right, let's do a high level here on the types of orders that they're out there. Okay, maybe you're familiar with them, but we'll do a quick overview. Orders that we'll be using and you should be familiar with is limit. Okay, a limit order. You should also have know what market orders are, know what stop orders are, stop limit, and then trailing stop, and then a trailing stop limit. Okay, we're going to do a high level view of each of these very quickly as well. Okay, a limit order, okay, its use is it's usually a default order on your broker's trading platform. It's basically to enter or exit at a specific price or better, but it does not guarantee to fill. You are setting that price. Okay, the positives is you control your execution at a specified price or better. Okay, better to you. Okay, you can also place these trades in advance so that you're ready to go based off of that. Now the negatives are you may not get filled, or maybe even partially filled due to the price not moving to that specific level. Okay. A market order is to enter or exit a trade immediately at the next available price. So if the market's open, your order goes in line. If there's a few orders in front of you, those will get filled first and then yours. Okay. But basically you're saying, get me in, I don't care. I'm willing to pay that price. Positive, it guarantees immediate execution. So you're going to get in with those orders. The negatives are you have no control of the price or when you get executed. Okay, you could take a little bit because you got to have someone on the other side of the trade, which means you could have some slippage, okay, being filled at a less desirable price than you actually anticipated. Okay. All right, let's look at stops. Stops, just the word stop order uses to enter or exit a trade at a predefined price. Okay, once that stop price is hit, then, okay, the order converts to a market order, which we just talked about, and then is immediately executed. Okay, so you're looking to get filled. The positives, again, it's a way to manage risk. You know when you will get out, and you will get out around that or close to it. Okay. The negatives is it has slippage. Again, so it carries the same risk as that market order. Stop limit. Uses to enter or exit a trade at, again, a predefined price. Once the stop price is hit, just like the stop, but then the order converts to a limit order and basically is executed at a limit price or better. So it does not turn into like a market order. Okay, so the other one we looked at, a stop, it could also be known as a stop market order on certain brokers. But a stop limit is it hits that price, then you need to get a better price to get out. Okay, now the bad side behind that, or the positives could be you may get filled at a better price than what you think. Okay, the bad news is that there's some slippage and you may not get filled due to the limit price. and is not recommended to be used as a protective stop. Okay, it isn't going to get you out of the order, so don't think of it that way. Okay, trailing stop. Trailing stop. This is going to be a little wordy. Okay, but again, you can read it and go back and review. This stop order continually adjusts the stop price based on market price changes. It's a trailing stop. To sell raises the stop price as the market prices increases, but does not lower the stop price when the market prices decreases. So it follows behind it if you're in the on the buy side. Okay, a trailing stop to buy lowers the stop price as the market prices decreases. Okay, but does not increase the stop price as the market prices increases. In both cases, the stop trails the market price, and when the stop price is reached, then the order becomes a market order, and then the same risk of a market order applies to trailing stops. So this is, again, you may think through this, you may go back and listen to it, read the words. I should have maybe broken this up to 2 slides, but wanted to get the point across. It will depend on how you want to use it. Okay, I don't do a lot of trailing stops, but you definitely can use it. Okay, I think there's different times and approaches of when would be a good time to do that. All right, the last one we'll look at is a trailing stop limit. Okay, it's going to work the same way as a trailing stop, with the exception of that instead of a market order being sent to the exchange, a limit order is sent, and then you stipulate the worst price you're willing to accept for a fill. Okay, there's no guarantee that you'll be filled, again, because price may gap through your limit price. So all we did was we just added another layer to basically a stop limit, except now that it's trailing behind that.